Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Looking at oil on the daily, weekly, shorter term time frame. So the bulls continued with higher lows and higher highs today, but this is not the candlestick the bulls want to see on a close. It's a doji of indecision, which after a little day bounce does show the potential that the bulls are puttering out here. And it is a potential bear flag forming. I have it drawn out on the other chart we'll go to in just a moment. The 200-day moving average is still holding 43.53. And on the weekly time frame, we are trying to form a bullish reversal candlestick, still maintaining higher lows, but we need to see more follow through than this is what it boils down to. So here is that potential bear flag on the daily time frame. There's your dump, small short-term bounce with parallel support and resistance lines, which usually indicate continuation to the downside. We need to see a bull break up towards $46 on the backs of the inventory report tomorrow to break bullish out of this potential bearish forming pattern. So looking at the hourly chart, we've had a lot of back and forth, and there's that clear support line holding on this uptrend and clear resistance line. We could get a little bit tighter here because it's a zoomed in time frame. But the key resistance level was 44.84, and we topped out with multiple tops. If you've been watching these videos, that's where we've seen lots of resistance points. And the fact that we've broken bullish above those levels a couple times, but really not seen the bulls able to maintain that strength and maintain the back test of 44.84 as support, that is a bit concerning, and we keep giving it all back. So we see a really bullish break, and then a dump, and then another bullish break, and then another dump. So I've been saying that I've been holding my USO calls in the videos recently, and I did sell out today at about 11 a.m. So on this big bull candlestick, I sold out near the top, fortunate enough there, and exited those USO puts because I am not confident with the way that oil is trading, and those were expiring this week, so I didn't want to have to deal with time decay, and I also didn't want to hold through the inventory report tomorrow. So as of this point, I am still favoring the bears. The bulls are holding on just fine, but because of that daily chart pattern, it's going to require a bullish reaction to the inventory report in order to break bullish out of this channel. So tomorrow's a pretty big day, and if we don't get momentum to the upside and a break above the mid 45 range up to 46, then we will look for potential weakness towards the end of the week. So I don't think the election is going to have a significant impact on oil. Maybe if we see the dollar see some reaction, it'll affect commodities. But in terms of the election having a bigger impact, I think it's going to be the inventory report that's the game changer tomorrow. And it will either confirm this oversold bounce is continuing or heading back down to the lows. And if it does head back down to the lows, we're looking down at 44, let me see here, 43.60. So we'll see what tomorrow brings. Important inventory report, 10:30 a.m. Eastern. I appreciate you watching. We'll check back in after the close.